Hello. The stock market always feels like it's nearing a potential inflection point, and every presidential election feels like the most important one of our time, and both of those can be true. So with that in mind, today we'd like to talk to you a little bit about the upcoming presidential election, but only so far as it intersects with financial markets. So, Bob, just when you thought 2020 couldn't get any more challenging, here comes election season. How should investors be thinking about the potential impact of the upcoming elections on investment markets?
Well, thanks, Adam. I think a key message that we want our clients to hear right up front is don't invest your politics. I cannot emphasize that enough, especially given how emotional so many people are today about politics. Washington is just one factor of numerous factors that go into market returns, so I think it's important not to overthink it. That doesn't mean that elections aren't important. Elections are important. But from a market perspective, they are rarely as bad as you fear if your candidate doesn't win, and they're rarely as good as you hope for if your candidate does win. The politicians, they make a lot of promises on the campaign trail in an effort to get elected. But once they are elected, what they're able to do is often very different than what they promise. So I do think we need to take everything that they say in stride. Now, the markets are used to gridlock. They're used to bipartisanship out of Washington, D.C. And there's every reason to believe that that's going to continue after this election. Historically, gridlock has actually been pretty good for the markets. So we'll see if that happens again this time. Historically, I will say that the markets generally rally after the election, irrespective of the outcome. Why? Because the uncertainty of the outcome has been resolved. And Adam, as you know, anytime uncertainty goes down in the market, that tends to be positive for equity prices. Now, this year could be a little bit interesting in that, given the surge in mail-in ballots, it's possible that we don't know the election outcome on election night. But whether we know the outcome on election night or a couple days later, or even a couple weeks later, ultimately we would expect that to be positive for the markets. So Adam, let me pass it back to you to talk about some of the best predictors of the election outcome.
Okay. In recent years, and especially in the last election in 2016, the accuracy of presidential polling has come into question. Now, we'll happily leave the debate over the integrity of the various polls to the political experts. But one point worth making here is that the stock market may actually be the most accurate poll available to us. In fact, since 1928, the stock market has predicted the presidential election winner 87% of the time, and in every election since 1984. When the 3-month trailing return on the S&P 500 leading up to election day is positive, then the incumbent party tends to win. When the 3-month trailing return on the market is negative, then the challenging party tends to win. And as you can see here, this metric has only been wrong 3 times in nearly the last 100 years. Now, this year's election will be held on Tuesday, November 3rd. So going back 3 months from that time to August 3rd, the S&P 500 closed at a price of $32.94. As of the recording of this video, the S&P 500 is trading at roughly, call it 3,200. So down, but only slightly. And why is that important? Well, every president since Herbert Hoover, so every president on this list, who presided over an economic recession in the last 2 years of their term, failed to win their reelection campaign. And every president on this list who did not preside over a recession in the last 2 years of their term and sought reelection won. So what's interesting today is that the stock market has quite obviously digested the economic reality of 2020 quite well. And despite the recession, hasn't ruled out President Trump's reelection hopes, at least not yet. Of course, anything can happen between now and November, but this is a metric that we're going to keep an eye on as we approach election day. So, Bob, how might the outcome of the election affect different sectors of the market?
Well, Adam, we have looked at the potential investment implications for different sectors of the market under the 2 most likely scenarios. One we're calling the status quo, that is where Trump gets reelected, the Republicans maintain control of the Senate, and the Democrats maintain control of the House. And then a second scenario we call the Democratic sweep, where Biden gets elected, the Democrats take control of the Senate and retain control of the House. So let's first look at some potential winners and losers in the sector, first with the status quo situation where President Trump is reelected. The first potential winner we think is a healthcare area, and that's largely because the Democrats have very actively talked about universal coverage or Medicare for all. It gets a number of different terms, but at the end of the day, that could create uncertainty within the healthcare area. The market won't know how firms are going to be able to make money or not, and so that could put pressure on that space. In addition, under a status quo situation, there would likely be less pressure for lower drug prices. I do think folks know that President Trump has been fairly vocal about wanting lower drug prices, but the Republicans in the Senate have been less willing to go along with that. We also think the financial sector will likely be a winner as additional deregulation occurs for the sector. And to the extent any tax cut goes through, the financial services sector tends to be a disproportionate winner in such situations. Energy will likely also be a winner in the sense that regulations will likely be eased. There could be an additional opening up of federal lands for production, and so it would likely be a winner. And then finally, the defense and aerospace industries could be winners, largely because the budgets to spend in those sectors would likely be higher under a status quo situation than under a Democratic regime. Now, looking at potential losers, technology could be a loser, and that's because of growing concerns about use of data, privacy, censorship, and the like. That could result in increasing regulatory pressure on the technology space, especially among the big players. Now, that could occur under a Democratic sweep as well, but we think there'll be more pressure under a status quo situation than under a Democratic sweep situation. Another potential loser is just trade in China. As we all know, Trump has taken a big stick approach to trade during his first administration, and we would expect that to accelerate with additional protectionist rhetoric if indeed he wins re-election. And then the last area that could face some pressure is the consumer staples area, and that some of the government benefit programs, things like food stamps and even unemployment benefits, the pressure to reduce those would be higher under a status quo situation. And most of those dollars do tend to go to the consumer staples sector. So that could be a potential loser as well. Shifting gears to the Democratic sweep scenario, the biggest winner is likely infrastructure. And while both President Trump and Biden support additional infrastructure, currently the Republicans in the Senate are more reluctant upon that. So to the extent there's a Democratic sweep, that increases the probability that some type of infrastructure package could be passed that would help that area of the market. The next potential winner is renewable energy. There would likely be an increased focus on climate change and impacts to the environment, such that there would likely be a big push for alternative energy sources. Another potential winner is trade, in that a Democratic administration may be less openly hostile to our trading partners, maybe more willing to take a more diplomatic approach than President Trump's current big stick approach. And then there will likely be other areas of the market that we'll want to explore. I list here marijuana legalization. If there's a Democratic sweep, that could become legal at the federal level. I don't know whether or not we would be able to make money for our clients in such a scenario, but we would certainly want to take a look at something like that. Potential losers in a Democratic sweep, first and foremost, is probably healthcare. As a result of the uncertainties that I mentioned previously with universal coverage or Medicare for all, there would also likely be increased pressure on lowering drug prices with a Democratic sweep scenario. Consumer discretionary space could come under some pressure. It's fairly straightforward, I think. To the extent there are higher taxes, that means there's less disposable income to consume with, and so that could cause consumer discretionary area to come under some pressure. Energy, we think, could come under some pressure because the Democratic platform is fairly anti-fossil fuels, so we would expect higher regulations that increase the cost of production. And then finally, the financial services sector could come under some pressure as much of the deregulation that occurred under Trump's initial administration, that could be rolled back to some extent. And of course, to the extent there are higher taxes, the financial services area would disproportionately be impacted from that. So that's what we think in terms of possible winners and losers. I do want to emphasize that we're prepared to adjust our client portfolios based on what the outcome is. And those adjustments may be material, they may not be material. Frankly, we'll just have to assess the outcome. For instance, if the Democratic sweep results in a very tiny majority for the Democrats, that's a very different situation than if there's a more substantive majority. So we'll just have to look at that situation once we know the outcome. One thing that I do want to emphasize, however, is we put together your portfolios. We put together the asset allocation for your portfolios based specifically on your individual circumstances. And that is going to continue irrespective of the outcome of the election.
Great, Bob. And thank you once again for joining us. This has been the third video in about as many months. Our next video will feature our third quarter economic and market commentary. And then we intend on doing another video once the outcome of the election is known. So please keep an eye out for that. But in the meantime, if there's anything that we can do for you, please reach out to Bob and I directly or your wealth advisor directly. Thank you very much. Investors Trust Company is here to help. Thank you.
Thank you.